Hi traders, welcome to this video. Today I want to introduce you into 3 exit techniques or 3 selling techniques I personally use in my stock trading. I think selling is really the most difficult part of trading because there's very often the danger of selling too early or too late. And the thing is, you never will catch the perfect exit. You will never exit on the last bar or on the top. And this is not your job as a trader. Your job is always to make sure that you make a decent profit, so that you have that your risk reward is large enough and that you met your goals of your strategy. I'm more a mid-term trader, so when I have a profitable trade, I hold it for weeks or even months. Mostly not years. So my goal is always to catch a 50 to 100% winner in 3 to 9 months. And as the most traders, I have a lot of different exit techniques. And I will show you 3 exit techniques in this video. 2 of them are selling into the strength, so selling when the prices are going up, and one is selling into weakness. That means selling when the prices go down. The thing is, the more experience you have, the more exit techniques you develop, and this is normally because the more you learn about the markets, the more you try to focus on selling and not on buying. So, and this is one of my fields where I always want to get better, to enhance my selling techniques. So the first one is a real simple selling technique, and that's using a trailing stop. A trailing stop will always make sure that you get out of the trade when the trend turns around. And here's a very good example. This is Ring Central in 2017. And if you have good buying techniques, you will enter the trade, or you enter the trade around around this time, and you exit the trade hopefully around that. And the moving average I use here is the EMA 65. You can also use the moving average 50, which is very similar to that. And I personally, if I use the EMA 65, I make sure that I avoid or ignore one-day breakdowns. You can see that here in those both examples here, the price dropped one day below the moving average 65, and then it recovered. And I try always to ignore that, and on that day, the price closed below the EMA 65. I will move my stop loss order very close to that level, or I use price alerts, which notify me in that case that the price will continue to drop. And it could be that you maybe get stopped out on this example here, but in that case, here in June 2018, you was able to hold onto the trade, And as soon as the stock starts to weaken and starts to trade below the EMA 65, that's the scenario where you want to get out of the trade. And you can see that here, this big top here was at the same time when the market itself started to top. So, and that's when you definitely want to go out of the trade. And in the whole trend, you were able to hold onto the trade and also hold onto the trade when the market itself corrected, because the stock here in that example ring was so strong that it withstand also the corrections of the stock market. There's one exception where I use a different moving average, and I will show you that with GSX. That was a recent trade from 2020, and you can see that the price went up very, very quick. And in that case, I'm using the EMA 21 as a trailing stop. And you can see that the price was able to hold several weeks above the EMA 21, and also every pullback ended at the EMA 21. And in that case, you want to switch. You want to take faster moving average, and I use the EMA 21 in that example. If the price is able to stay above the EMA 21 for 7 to 10 weeks, it depends a little bit on the price behavior, then I'm switching to the faster moving average. And especially in times when the market itself is in a very strong and very aggressive uptrend. Okay, that was using a trailing stop. I personally use multiple exit techniques. It does not mean that I exit the full position if the trailing stop is broken, or if the price starts to trade below the moving average. It could also be that I exit a portion of my trade before the trailing stop. I always try to trade around a core position. So if, for example, I have a position of, say, 15%, I sometimes reduce that to 10%, sometimes extend that to 20%, 25, 30%, depending on the price behavior. And that is so my philosophy, to trade around a core. And it's more like not switching on and off. It's really more like a dimmer. Sometimes more aggressive, sometimes less aggressive. Okay, another technique I'm using is to make sure I exit a trade, or I exit a trade partially if it's too extended. And I will show you that with the example IIPR, and I switch to the weekly chart. This here is the weekly chart. I'm using the EMA 13 and the EMA 40 in the weekly chart. And I'm using an indicator which is the distance from the 200 moving average. In the weekly chart, it's the distance to the EMA 40. This is an indicator which is available in TradingView. And it measures the distance from this blue line to the current price. So for example, in that case here, it's around 40%. And in the cases here on the top, it's more. And I personally look at the indicator, and if the price is more or around 70%, 70% from the EMA 40, in that case I'm looking for an exit, or I'm selling a portion of the trade directly at market, because the more a trade is extended from the EMA 40, the more it is likely that the price will pull back. I did a lot of research on this topic, and I personally see that the number 70 up to 100 is a good number for more aggressive stocks. For less aggressive stocks and large cap, it's more around 50%. So, and you can see that the indicator here in that example here, this is 65%. In that case here, it's 61. In that case, it's 66. And here it was more than 70%. In that case, you will search for additional signals. For example, this small red bar here, which is a reversal bar. That means the price was up during the week and then closed weekly on Friday. And this is showing weakness. This shows that other market participants are not willing to hold a position through the weekend or reduce position before the weekend. And this is a sign. And this is a sign for me when the stock is extended to sell at least a portion. And you can see also the big volume here, which is another sign for distribution. Another technique you can use to see if a stock is extended, if you use this distance percentage from EMA 200 indicator, and you can see that every stock has something like an extended niveau. So in that case of IRPR, it's more around this 64 or 65%. So that means every time the stock is up 65% from the EMA 200 in the daily chart or EMA 40 in the weekly chart, in that case the price is very likely to pull back. And if you go through a lot of stocks, you will see that every stock has something like a pullback niveau. And you can see in that case here the stock pulls back. In that case here the stock also pulls back but was able to move higher. And in another case it builds a consolidation, and here it was extended. And you can see that also you see several pullbacks here to the EMA 13, which is another sign that the stock already is an uptrend for months, and there are several bases. So you can see that there's more than just using one indicator or just using one signal to exit a trade. You must always look what is the price doing and what is also the volume doing. I want to show you another case, and this is AOI, Applied Optoelectronics. And there was a very, very strong trend here in 2016, 2017. And there you can see one thing. And if you compare this previous extended niveau here, so it was around 40% or 31, 36. You can see that now the trend started already from an extended niveau and surge higher. And in that case, I do not look only at 70% as an extended niveau, but more into the direction of 100%, because you can see that here the new trend already started from a very high niveau, and the price was already extended in that case here 40%, and then the move started. And if you see that the price is already extended 50% and then this trend started, you want to go more for 100% instead of 70%. Yeah, this is a technique I personally don't use to exit a full position, only in cases when I really see an exhaustion run or something. But this is more when I want to see, okay, where is the stock in relation to its moving average 200? And the more it is above the moving average 200, the more extended it is. And then, it offers some good chances to sell into the strength. And you can see that that there are always reversal bars or signs here to exit the trade, or to at least exit a portion of the trade and sell into the strength. Okay, the third technique is very, very complex and needs a lot of experience and a lot of homework to get familiar with that. And this is selling into an exhaustion run. I switch to the daily chart now again. And this is Chronos. And Chronos, you can see that Chronos has something like a parabolic move here. And every parabolic move will soon or later collapse. And the stock is really running out of gas. You know, no buyer is left. Everyone bought at a special time. And then the stock started to collapse. And this is what the stock traders call an exhaustion run. An exhaustion run is very complex to spot, because there are so many different patterns and forms of an exhaustion run. But what I always look for is extreme volume, an extreme price run, and also a very big price move in a short time. And you can see that here Chronos moved 160% from the low here, and from the breakout point or from the pattern here it moved 80% in a very short time, so only in 11 bars, so 11 days. And that's really like an exhaustion run. And you can see similar signs. So the first one is if you look into the volume, you can see that the volume here is increasing, and the volume is also, or the volume gets stronger on down days. Here you can see an example. So this is the first sign that other people are selling into the strength. And then you can see one thing, and this is, you see the highest volume for months, and this is that bar here. You see the highest volume for months. And you see one really, really big up move, and often it started to gap up at the same time. Here you can see that the stock is up 30% in 3 days. So 30% in 3 days, and it always gapped up. And this is something where you can see, okay, a lot of people are buying into the stock very, very aggressively. A lot of emotions are involved, and this is where you want to take profits. So in that case, and you can see also that the close is in the middle of the candle, which also shows you that that the stock isn't able to hold the highs. And in that case, I sometimes sell 50% directly at the market, or even more, so sometimes 75%. And then I hold the rest to see if the stock is able to continue its run. So I'm an early seller, in that case, or if the stock breaks down, and then I'm selling the rest into the weakness. And you can see that often on market tops. And I want to show you another example. I personally don't trade it, Tesla, but it is really a picture-perfect example of an exhaustion run. And the good thing about charts is you can go through charts bar by bar to learn to see the signs. And you can see if you look here on the volume indicator, you can see how the volume is exploding to the upside. And more and more volume is coming into the stock. And if you now zoom out, you can see that this 60 million volume bar is the highest for ever. So it's the highest since the going public of the stock. And this is a clear sign that everyone bought already. And yes, of course, the price can go higher or it can gap up or whatever, but you always see such signs. This is extreme volume. This is extreme price action here. You can see that the stock is up. It's up 50% in 2 days. It gap up multiple times here. This shows you that high emotions are involved. This is buying panic, really. They have fear, or the market participants have fear of missing out their trade, and they buy aggressively. Short sellers are covering their positions. And the smart guys on the stock exchange, the institutions and the experienced sellers, experienced traders, they are selling in that situation. And they are selling to the non-experienced and new traders because they are getting greedy here, and the experienced sellers are getting defensive because they know that no stock will go to the moon. And and the first signs is really extreme volume here, extreme volume and extreme price action, and this is where you want to sell. In that scenario, I maybe had sold around 50 or 75% of my position. And and then you can see what's also typically, you can see that the price tries to retest the highs or try to get up, because now the inexperienced traders and the greedy people try to push up the price. But everything is on very low volume, and no rally will be successful on low volume. And in that case, the price started to collapse. And if you are not familiar with selling into an exhaustion run, you can also use moving averages. You can see that if you, for example, use a 21 moving average, you are a seller, and you can use the first rule. If the stock is 7 to 10 weeks above the moving average, sell at a break of the or as soon as the price started to trade below the moving average. And you can also apply the EMA 8 in that example here, because the stock is so aggressive and so fast that also the EMA 8 is the real pullback level here. And you can see that the stock found support every time the stock at the price pulled back to the EMA 8, and then on the break of the EMA 8 the correction started here. The secret really is to combine those selling techniques. So for example, as I said multiple times in this video, sell a portion into an exhaustion run, exit the rest on a break of a trailing stop, or using the extended rule. So if if I switch now to the weekly chart and look at Tesla here, you can see that that the distance from the EMA 200 or the EMA 40 in the weekly chart is more than 100%, which is another rule I'm using, 70 to 100%. And the thing is, it is not important to sell at the top here. You will never catch the real top in that case. It's more important to make a decent profit. And if you are selling in here, for example, in the 750 region instead of the 900 region, it's absolutely okay, because if your profits are big enough, this is a great trade. And if you combine multiple selling techniques, then you make sure that you always reduce your position and you always make sure that you sell around the top of the stock. And this is what is really important. Okay. I hope that this video helped you to understand that selling stocks isn't easy, and it is something where every trader tries to improve over time. There is no perfect selling technique. There are only multiple techniques which you can combine to maximize your profits. And if you find this video helpful, give it a thumbs up, write a comment, and share it on social media. You can follow me on Twitter, Facebook, Instagram, and you can follow me, of course, on YouTube. And I recommend to subscribe to my free newsletter. I send it out every Sunday with some stocks from my watch list and more trading tips.